And we are live. Guys, so earlier this week, I released version 6.0 of my free dividend portfolio tracking spreadsheet, which you can start using right now, guys. There's a link to it in the description of this video. I hope you check it out. But since I put out the spreadsheet, I've gotten a lot of questions on how to do a few specific things. Like a lot of people want to know, how do I add more rows to the spreadsheet to accommodate more stocks? How do I add international stocks? How do I change the currency on the spreadsheet? So these are a few things that we're going to be going through in this live stream. I'm going to walk you through how to do all those things and some more, and I'll also try and answer whatever other questions you guys have. But before we get into all of that, welcome to another Dividend Happy Hour, episode 36. I hope you guys had a fantastic week. I know I sure did, and I think we need to do a little cheers. I think a cheers is in order. So guys, here's to another Dividend Happy Hour. Thank you so much for tuning in with me tonight, Friday night, and unfortunately, I'm keeping it clean tonight, guys. This is just a little cup of coffee. It was a long day. Worked pretty hard today, so I could use a little pick-me-up at 5 o'clock in the afternoon, apparently. But anyway, I want to hear a couple things from you guys. I want to hear, number one, what are you sipping tonight for the Dividend Happy Hour? But also, number two, what did you buy this week? Which stocks did you add to your portfolio? Let me know in the live chat. And also let me know in the comments below if you're watching the replay. I'm going to put some of these comments up here on the screen. Say what's up to all of you guys who are tuning in. We've got Amadou, we've got G-Man, El Dynamico, welcome. Tony, Luis is in the building. Ex-Dividend Dad's in the building as well. The usual suspects. We've got Chris, we've got Will, Paolo. The Grinch is in the building. Phil the Great is here. Matt Money's here for the Lambo, came for the Lambo. Stay for, I don't know, you could come up with a good reason to stick around, I guess. Jack is in the building. We got Morgan here, 1 a.m. over there in the UK. Man, that is like dedication to the Dividend Happy Hour. Respect. Thank you so much for tuning in. We've got Eddie, Rye, the investor guy, Caleb, Chris, Miguel's in the building. MRG's here from Chicago. No, he's not from Chicago. Mario's from Chicago, excuse me. Let's see. 588 King. Sipping a pike roast from Starbucks. Nice, man. I'll drink to that. I just have the Walmart brand beans. And he picked up some Tyson Foods. Very nice. Very nice. Okay. Pat here. Okay, Pat made it. Good stuff. Robert's here. Okay, so this is good. Sign up for the email on the site and still have not got the portfolio tracker. I will be addressing this in just a couple of moments, Robert. Stay tuned because this is something very common that tends to happen. I don't know. Well, I have a guess as to why, but we have John, Ethan, Ian, J and B, Crawler, Michael, Rex, EA, Alfonso, Driving America. Man, thank you guys so much for tuning in. All 71 of you. It looks like I see, the most common stock I'm seeing here in the live chat is none other than Tyson Foods. I see a lot of you guys picked up some Tyson Foods this week. I have not gotten around to listening to their recent earnings call, or I don't really know anything about what's been going on with that, but I know it supposedly was not very good. Maybe, created a little bit of a buying opportunity. So I'm guessing that's why a lot of you guys picked up Tyson Foods, which, hey, you can't go wrong there. It's looking like a great company, nice high growth dividend stock. We've definitely talked about it on the channel a handful of times pretty recently, but while you guys like to zig, G-Man is over here zagging, and instead of picking up some TSN, he picked up some BTI, JEPI, JEPQ, and MO. He went for some of those high yielders this week. Okay, so let's see here. Oh, interesting. Phil picked up some KRC and Kroger, ironically enough. Nice, man. Very nice. I still have Kroger on my watch list, still thinking about adding that to the portfolio, but I'm kind of chewing on it a little bit. I am kind of leaning more towards that than I am Tyson Foods, though. I just kind of like the idea of investing in a grocery retailer instead of another food, type of company. I feel like I have a handful of those in my portfolio, so I just don't know if I want another one. Still thinking about it, though. Okay, guys. Anyway, let's see here. What else do we got? Okay, interesting question. So you don't give out the portfolio tracker for free? Yes, I do give out the portfolio tracker for free. The issue you're having, I'll explain it in just a moment, Robert. You got to hang tight. Hang tight for just a moment. I'll get into that. It's actually the very first question I want to address. And actually, guys, why don't we just get into it? Because I feel like there's 5 or 6 questions here that I want to go through and answer. And Not all of them. It's not going to take too long. There is one of them that might be a little bit lengthy, so I'd rather start this sooner so we can get to the actual Q&A, the fun hangout session later on. So, okay, guys, getting into the very first question. It's the one that Robert has. It's, okay, oops, excuse me. Slide number 2, getting ahead of myself. Man, getting even farther ahead of myself. Okay, question number 1 that I have been getting is, I didn't get the spreadsheet email. What should I do? Okay, so what happened? You click the link to get the spreadsheet, you input your email, and what's supposed to happen is you're supposed to receive an email with the spreadsheet link. For some people, they're not getting that email. It's a minority for sure. But in case you did not get the email containing the spreadsheet link, all you need to do is just shoot me an email real quick. Okay, Ryan@retirewithryan.com. If you shoot me an email, I'll just email back the spreadsheet links manually. Like I said, there should be an email that automatically goes out, but for some people, they don't receive it, and it usually just ends up in some sort of spam folder. 99% of the time, that's the case, but nonetheless, I'm still happy to help you out. So if you signed up for the spreadsheet but did not get the email, just shoot me an email real quick. Just let me know what's going on. Hey, I didn't receive the spreadsheet links. I'll shoot them over to you real quick. Bada boom. Bada bing, it's all good. So that's question number 1. The next common question that I've been getting so far is, how do I transfer data from version 5.0 into version 6.0? So you're using a previous version of the spreadsheet. You know, you don't want to spend a lot of time going through and changing everything over to the new spreadsheet. I get it, guys. It's actually super easy. All you really need to do, and I'll demonstrate this momentarily, all you really need to do to transfer things over from the old version of the spreadsheet into the new version is it's copy and paste. It's going to take you a couple minutes max, like from start to finish. And let's go do it real quick, okay? So, excuse me. Got a frog in my throat here. Let me take a sip of water. Okay, so what we're looking at here, guys, this is just a demo version of the new spreadsheet. And I also have my version of the spreadsheet open. So let's assume, this is version 5.0. Okay, got all my data in here. I've got my tickers, number of shares, my average cost per share. All I really need to do to transfer everything over, just highlight this whole entire column. Okay, hold the shift key down. You can also, actually, we'll do it one column at a time because maybe I'm screwing up. So hold that down. I think I could maybe hold command down. Yeah, there we go. See, so it's highlighting multiple columns at a time. Okay, once those are all selected, copy, and then just go over here to the new version of the spreadsheet and paste. Although that didn't really work out. So let's do it one at a time. Excuse me, guys. So one column here. You guys will get how this works. I mean, I'm just kind of a rookie, I guess. So boom, that's going to be good. Go back over here, get your number of shares. Okay, copy, paste. Okay, go back over to the old one. Average cost per share. Copy and paste. Boom. Everything's done on the positions page. The only other place you should really need to do the same thing is over on the dividend log page right here. But it's the same principle. Okay, you just go over to the dividend log page on your old spreadsheet. You can copy and paste, or just copy all these, and then you can paste them into the new version of the spreadsheet. Same exact process. So super easy to do that. Like I said, from start to finish, it really shouldn't take you a long time. Probably should take you just a couple of minutes to get through everything. And I'm gonna fix these colors here because it's gonna bug me. So yellow, let's yellow everything out here. Get back to normal. So that's question number 2. And I'll go through, I see there's some comments coming up in the live chat. I'll go back and take a look at the comments once I get through this spiel. I want to get through all these questions first. So moving on to question number 3, how do I add international stocks? Now, truth be told, the spreadsheet really does primarily work best with U.S. stocks. Canadian stocks, some Canadian stocks do tend to work. The issue with international stocks isn't so much with the spreadsheet, finding the right company and the right share price and stuff like that. It really is more so an issue of pulling the annual dividend data. That seems to be the biggest issue with international stocks. But nonetheless, I'm going to show you guys how to add stocks that aren't on the NASDAQ or New York Stock Exchange, or yeah, that's what it'd be. Stocks that aren't really on the New York Stock Exchange, basically all international stocks. So let's go back over here. Okay, so if we want to add, there's this Canadian company called TELUS. I think that's how you pronounce it, TELUS. And in Canada, I believe it's just ticker symbol T, but obviously, let me zoom in a little bit so you guys can see this a bit better. What am I doing here? Okay. But obviously T, ticker symbol T here in the United States is AT&T. So that's not the right ticker symbol. So we need to find the right ticker for T-list. So what you actually do, guys, just go over to Google. Okay, just type in this right here, the company name, T-list stock, and then on the exchange you're looking for. So T-list stock, TSX, and Google Finance is gonna pull up something like this, okay? And what you're looking for is the ticker symbol that Google gives you. So go up here, and this is the actual one that we want. If we input this into the spreadsheet, it's gonna pull up the right company, okay? So going back over to the demo spreadsheet, TSE:T, and no spaces, do not include a space here. Hit enter, and we can see, boom, it's loaded the proper company, okay? And then scrolling over, let's see if it actually pulled the dividend data. So this is the one issue, right? So it pulled the company name because this actually comes from Google Finance. We can see that right here in the formula. Excuse me. But then going back over here, the dividend data did not load, and that's because it comes from FinViz, which is a different website. Unfortunately, Google Finance doesn't offer the annual dividend data, so it has to scrape it from a different site, and FinViz probably just doesn't recognize this ticker symbol. So unfortunately, that's where the issue lies with many of the international stocks. Now, the workaround for this, if you really want to use a spreadsheet with international stocks and you primarily have those in your portfolio, it's unfortunate. I don't know of a workaround for it for now. The best thing you can do, or really the only thing I think you can do, is manually input the annual dividend data. And I know it's a pain in the butt because every time a stock increases their dividend, you'll have to go and change that. But for now, that's just the best solution I can offer. And I don't know. I don't know if there's ever going to be a workaround for that at this point, guys. Yeah, I don't know. Stay tuned. And if any of you guys have more info or have any insight on how to correct this, please let me know, because I'd love to help accommodate a lot of you international users, because I know there's an increasing amount, which is awesome. But I feel so bad because the spreadsheet is not as functional for you guys around the world as it is for us here in the United States. So I do apologize for that. But that's the third question, guys. Moving on to the next one. This kind of goes along with the third question. How do you change the currency? So, let's say you're using euros, maybe you're using pounds, dollars just for whatever reason is not working for you, okay? So it's pretty easy. The columns that you want to change into a different currency, which is pretty much going to be all of them, you just highlight all of the cells you want to change, okay? Once those are highlighted, you're going to go, Once those are highlighted, we're just going to use this sample here. You're going to go to Format, you're going to go to Number, and you're going to go all the way down. Hopefully you guys can still, oh, shoot, it's not even on the thing. There we go. Okay, so sorry guys. Okay, all the cells are highlighted. You're gonna go to Format, Number, go down to Custom Currency, okay, and it'll pull up this drop-down menu. And then let's say you want euros, you just type in euro, or yeah, EURO, and it'll pull that up. You just click that and then hit apply. Maybe you want pounds, British pound sterling, bada boom, bada bing. You just click that, click apply, and it should change everything into pounds or euros or whatever your desired currency is. So that's pretty easy. And that's actually something different. So kind of question 3B, in addition to this, is, how do I convert it? Because it'll change the dollar sign to a pound sign or whatever, but it's not going to change the actual number. So that's something completely different. You'd have to create a whole separate column. Let me go back over to the spreadsheet. You'd have to create a whole separate column, like next to share price, for example. You'd have to create a whole column here that's the share price in pounds or euros, and then you'd have to include a formula that converts this into this, whatever the conversion rate is. You'd have to include that. And I've been asked a few times, like, can you make one that has the information in euros? Can you make one that has the information in Australian dollars and pounds, whatever? I don't know. I don't know. I got to be honest. I think at this point, that's kind of, that whole thing is above my skill set. Not so much doing it, but I just don't know if it will work, considering that most international stocks don't really work with the portfolio anyway. So these are all things I'm thinking about, all things I'm trying to work through, and all things I'd like to accommodate in future versions of the spreadsheet, but I don't have the best solution for it right now, unfortunately. And once again, if you guys have ideas for me, let me know in the live chat, let me know in the comments below, or shoot me an email, because I shared that with you earlier. So I'm always happy to get your emails. So let's move on to the next question, guys. This is the most common question I get all the time. How do I add new rows to the spreadsheet? I get at least a comment per day, at least an email per day asking the same exact question. So basically, guys, this spreadsheet, let's zoom out a little bit, make it easier to see. What's going on here? This spreadsheet comes standard with 30 different rows, which means it can hold up to 30 different holdings. Now, there's a lot of you guys out there who maybe have 35 or 40 or 50 plus holdings, right? So how do I add more rows to this spreadsheet to account for those additional stocks in my portfolio? Okay, now this is the question that's going to take probably a few minutes to get through. It's not complicated, but there's a few steps to walk through, and I'm going to do that for you guys. I might go a little bit fast. I apologize if I do. If I go fast, you can always rewind the video, maybe play it in half speed or something like that so it slows it down. But I do want to get through it rather quick because we do have a couple more questions to get through. But before I answer that or go through that, guys, one thing that I did forget to mention, I did recently, this morning, I added this new column in the spreadsheet for version 6. It wasn't released on Wednesday when I put out the spreadsheet. it was a random idea I had. I added this additional column that will link to the Seeking Alpha, from the stock. So Apple, their Seeking Alpha link is right here. So I can just click that. It'll take me right to Apple on Seeking Alpha. So super convenient. You guys know I use Seeking Alpha for pretty much everything. So I know for me it was a good addition, and I know a lot of you guys use Seeking Alpha as well. So hopefully you guys find that to be a helpful feature. Instead of having to go back and forth and type things in, you can just click it right there. But anyway, adding new cells or adding new rows, okay? So let's say we want to add, maybe we've got 35 different stocks in our portfolio. Let's say we want to add 5 new rows, okay? So to do that, the first thing we need to do is add the rows. So 1, 2, and real quick, actually, sidebar, we're going to do this in the middle. We're going to do this in the middle of the spreadsheet. We don't want to go to the bottom and add 5 new rows, because what it's going to do, for whatever reason, it's going to mess up all of the formulas on this bottom row right here, which are used in other places on the spreadsheet. So we don't want to do that. For whatever reason, if we just add new rows in the middle of the spreadsheet here, those formulas will automatically adjust. It'll just make our lives a lot easier. So you're going to highlight 5 cells or however many that you want to add. You're going to right click. You're going to click Insert 5 rows below, okay? And then once those new rows are created, they're going to be blank because the formulas have not transferred over yet. So what we're going to do from here, we're going to just highlight the row above, okay? Actually highlight the entire row above and then go all the way to the far right. You'll see this little blue box right here, okay? And then once your mouse hovers over it, it should turn into like a plus sign. Just take that, drag it and drop it to all of the new rows you just created. And you'll see that, that the formulas carry over. I mean, the stock name's in here, and we don't want that. But if we remove that, we can input 5 different stocks now. So maybe we've got some Microsoft. Maybe we've got some, what else do we got? Maybe some ExxonMobil. Maybe we've got some Pepsi. We've got, give me 2 more, guys. Let's say BTI, and then let's say Philip Morris. These are just the first stocks that came to mind. I don't know why. Okay, but everything's in there. Okay, so we've added those 5 new rows, and for the most part, that's done. But we can see it's actually messed up a couple different columns here. So all of these new cells in the portfolio allocation column and all of the cells in the percentage of total income column are now kind of screwed up, but it's an easy fix, guys. So the issue for both of these lies in the denominator of the formula, and we're going to do a little division here. So, okay, we can see in the formula for cell, what is this, R17, which is the first new row that we made right here, the formula is screwed up, and if we go up to the formula bar here, hopefully you guys can see that, and this might get a little complicated. I apologize if I'm going too fast. Like I said, you can always go back and rewatch this, but we can see the denominator here is W38, but if we scroll down, okay, W38 is going to be this cell right here. It's a completely blank cell. What we really want the denominator to be is the one above, W37. So if we go back to these cells who are having the issue, we just change the W38 on all of them to W37. So do that, you can see it's fixed. Change W39 to W37, fixed, boom. And we'll do it for the other 2 here, okay? And great, so now everything's fixed there. It's back to 100%, and we'll do the same thing here in this column here. So it's X38, we want X37, okay? 39, 37, Hopefully this is making sense so far, guys. Like I said, it's not super complicated stuff, and you do it a few times, you'll definitely get the hang of it. And also, like, if you guys, for whatever reason, just can't figure this part out or just really stuck on it, it's too confusing, feel free to shoot me an email. I'm happy to help you guys out. I'd prefer you to at least try it out for yourselves. I think it's good practice, and it'll really help you develop a better understanding for using the spreadsheet and using spreadsheets in general. So I think it's a good problem to work through, but for whatever reason you get just tremendously stuck, I'm here to help. So you can always shoot me an email, share your spreadsheet with me, let me know what's going on, and I'll go in there and doctor it up for you and make sure you're taken care of. So going back over here, we are all done on the positions page at this point. Everything is copacetic. We've added those new rows. Everything's looking great on this page, but we added 5 new stocks, and this is not the only page we have to worry about now. We also have to now worry about the dividend log page, okay? And we need to add 5 more columns on the dividend log page to account for the 5 new rows that we made on the positions page. So this one, it's a bit simpler. You don't have to worry about adding new columns in the middle of the thing. You can just, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. You can just do this, highlight the last 5, insert 5 to the right, okay? And then these are going to be blank. And then let's actually merge this. It's going to bother me. These formulas right here are going to be blank. And one thing about it, I don't know if you guys caught this from using the spreadsheet, these automatically populate. Like, we didn't input any of this on our own. This is pulled from the positions page. So all the tickers you input on the positions page will end up, it'll have its own column here on the dividend log page. So it's supposed to be super convenient, but the issue is, like, every time we add new cells on the positions page or add new rows, it screws things up on the dividend log page. So we're going to go ahead and fix this. Once you add the new columns here, you just want to make sure to fix the formulas, okay? So the last working one here, the last working column is A15, position 1, A15. So we're going to copy and paste that, A15, A16. And then you're going to do that all the way, A17, A18, 19, and I won't do all of them because you guys get the hang of it. A20, just a couple more, A21, and you can see that the columns are now starting to populate with the stocks that we recently added on the positions page, right? So, oops, 23, that should be 24. Okay, and I won't go through all of them because there's like at least 10 more. I don't want to waste your guys' time. You get the hang of it, right? Hopefully. You just basically need to make sure that all of this whole row here, okay, B2 to, AJ2 has positions A2, A2, A3, A4, A5, A6, all the way down to the very end, which should, like this cell right here, should be the last stock on the positions page, okay? So that should be, when it's all said and done, whatever this stock ends up being, So hopefully that makes sense. And then once you do that, guys, once you fix things up on the dividend log page, actually there is one more thing on the dividend log page I forgot. This part is super easy though. We can actually just drag and drop this. So once the stocks are all there, you'll just need to take these, because these are the totals right here. Take that and then drag it and drop there. Take this, drag it and drop there, because these are the totals for each year. Take that, drag it and drop there. Take this, do the same, and then one more. Drag it and drop there, okay? And then all of these cells over here to the right, like these should, no, these are actually wrong too. So I apologize, guys. One more step. So once you added the new rows, okay, the stock names are in there, everything's good. Go over to the totals, see how it says AE5? Well, we added new rows or added new columns all the way out to AJ, okay? So what you need to do is change all the AEs to AJs. But the good thing is, once you do it for one, you can just drag and drop it all the way there. So AJ5, this becomes AJ6, see? So if you do this, all you just need to change the J. AE18, change that to AJ18, and then drag and drop it all the way down there. Actually, you'd need to do it one more too, all the way down to the bottom, excuse me. I didn't do it on this one either. But then you do that all the way down to the bottom for the other 3 or 4 years that are on the dividend log page. And then once you do that, everything should be completely taken care of. Everything else on the spreadsheet should populate just fine. Like that should be the last thing you have to do. So that's essentially what you need to do to add new rows to the spreadsheet. In the future version, whatever the next version of the spreadsheet ends up being, I'll probably just have it come standard with 50 cells, no more than 50 cells, because that's a lot in itself. But I'll probably just have it come standard with 50 cells, so you guys don't have to worry about that as much. It used to be 20. I used to have just 20 cells in there. But anyway, version 7, whenever it comes out, I'll add more cells, okay? So moving on to the next question, guys. This one is, how do you track dividend income from sold positions? So, going back, we added those new stocks, but let's say, going back to the spreadsheet, let's say going back to the positions page here, let's say you decide one day you're going to sell out of Procter and Gamble. I hope you don't do that because it's a good company, but let's say you're not feeling Procter and Gamble anymore, but then over here on the dividend log page, Procter and Gamble, you've got maybe January 2020, you had $5 dividend income, 10. These are just random numbers, obviously. So, and I know that's Pepsi. What am I doing? Okay, so Procter and Gamble, you sell out of it. You don't want to lose track of that dividend income because that is dividend income you receive. That's going to count towards your total return in your portfolio. So you don't want to lose that. You still want to keep track of it. So if you don't have this position anymore, though, you're just going to take these, okay, and then move them over to the sold positions column right here, okay? And you're going to put them in sold positions number 1 because this was portfolio number 1, okay? If you sold out a position in portfolio number 2, you'd put that in sold positions number 2. But basically, guys, the story goes, if you sell a position, just move all of the dividend income that you had in that position over to the sold positions column, and then that's pretty much it. That's all it takes. And then there's one more question here, guys. Actually, that was it. I thought there was one more, but that was it. But I do have one question for you with that. What features do you want to see in version 7.0? I know I just released version 6, but at some point, I'm sure I will release a 7th version. I don't know how soon. I probably need to cool it because this one was a lot of work. So I'll probably cool it. But what do you want to see in the next version? Like, I know we've talked about some things like international stocks, euros, different currencies, 50 rows for stocks. Aside from those things, like what are some other cool features that you think you'd like to see in a future version of the spreadsheet? I'm curious, and I'd love your guys' ideas. So let me know there in the live chat, and also let me know in the comments below. Okay. Uh-oh. First comment I see is this one right here. Luis, you dog. You dog. Just kidding, man. Okay, so I got to take a sip of water, but I want to see what questions or what comments you guys had while I was going through all those questions. So, and this is a good point from Morgan. Like, as someone who's using the spreadsheet from the UK, people shouldn't be that picky. As a free resource, it's the best one out there. I just track my UK stock separately. Thank you, man. And that's the thing too. Like, as the saying goes, you get what you pay for. So unfortunately, like, the spreadsheet's not perfect. It definitely has its flaws. It's definitely improved over time. But it's still not perfect. But at least you guys didn't have to pay for it. Like, knowing that, like, I could never charge for the spreadsheet. This spreadsheet has been a lot of work. This is now in its 6th version. It's come a long way in the handful of versions that we've made. And I also didn't do this by myself. I got to shout out a few guys, most notably Zachary Scott. Zach, like, a lot of the formulas in this spreadsheet came from him that he helped me out with. So Zach, man, I really appreciate you helping me out. The spreadsheet wouldn't be what it is without you and without some of you other guys out there who've helped me with formulas and stuff like that. So it's really been a group effort. So thank all of you guys. Anyway. Oh, but this is another good point too. Mike says you guys can customize the spreadsheet to your liking. I just gave you the structure. So yeah, and honestly, I totally encourage that. Like, if you guys want to make whatever changes or improvements to the spreadsheet, like, please go for it. I don't know if I said this already, but like, I'm really not the most adept spreadsheet maker. This is not my forte. And there's some of you guys out there who are just so much better at this stuff than I do. So please, like, don't feel like you need to just leave it how it is. Feel free to chop it up and do what you need to do. Make it better. I don't even know what to say to that. I really don't. Let's see. Ivan says, maybe add an FAQ manual showing how to do this on a document. So moving forward, I'm just going to share this video. I feel like this video is going to be much more effective and much less time consuming to put together than a document, and it's going to have the same effect. So I'm going to include this version. I'm going to go and put a link to it on the spreadsheet template, just so people can go back and watch this video. But yeah, I mean, yeah. Yep. One thing that kills me too, not kills me, but like one thing that does happen too often, and I did put something on the spreadsheet for this, and actually, yeah, I did put something on the spreadsheet for this. So I get so many emails every day about like, Ryan, like I need editor access to the spreadsheet. It's view only. I need you to let me in basically. I need, whatever. But it's like, guys, you click the link to the spreadsheet. It's right in front of you in red. You just need to make a copy of the spreadsheet and you'll get where you need to go. This tells you exactly how to do it. Oh, sorry, it wasn't on the spreadsheet, but this right here. It's like that is one thing. Yeah, that is one thing. Yeah, Michael, that's fair too. Like if you'd rather pay $5 and not have to worry about it, then then go for it. Like no sweat off my back, but doesn't hurt to offer something for free too. Man, breaking my heart. Let's see. Yeah, so I think I'm actually pretty, yeah, this is a good question. I think I'm pretty much caught up in the chat. So guys, this question from Chris, moving on from the spreadsheet, unless we get more questions. Ryan, are you going to add to Apple anytime soon, or are you waiting to see if it might go back in the 120s? Yeah, I'm waiting to see if it drops back down, man. It's like, what, mid 150s right now? I think my position's up. It's already up 16%, 16 to 17%. So I'm waiting to see if it dips back down. I have like 6 shares at this point, so that's not too bad. But yeah, I'm waiting to see if it drops back down, and if it does, I'll probably add more to that position. But for now, like my Procter & Gamble and my Johnson & Johnson positions, I'll actually show you guys real quick. Those 2 positions are down for me right now. So if we go over here to my positions page, no, they're not loading, but oh, it's not loading. Let me refresh the page real quick. Sorry, guys. Okay, there we go. So where was it? So Johnson & Johnson for me, like I'm officially down almost 2% in my Johnson & Johnson position, and Procter & Gamble, I'm down about 0.5%. So while I'm down on those, I'm gonna try averaging down on those a little bit and swoop up some shares while it's like around my cost basis. So let's see. This is an interesting question. Why have 20 stocks paying a 3% yield instead of 10 stocks paying 6%? Why do people do that? Okay, this is an interesting question. I don't quite know how to answer it. So, number one, there's a few reasons. I think it's actually 2 different questions. So, number one, people might opt to have more stocks. People might opt to have 20 stocks in their portfolio just to be more diversified. They might not feel like 10 is enough for them. On the other hand, why buy stocks that pay a 3% yield when you can buy ones that just pay a 6% yield? Well, oftentimes, and this isn't true all across the board, oftentimes higher yielding stocks, and I'm talking about this in my Sunday video, oftentimes higher yielding stocks come with an additional amount of risk. And depending on the investor, they might not have the appetite to take on that risk. So they might feel more comfortable with a 3% yielding stock, like, Procter & Gamble is 2%, but a 3% yielding stock, or a lower yielding stock in general, that's something that offers a higher dividend yield, perhaps maybe like a JEPI or an ORCC or even an Altria Group, or and I don't even think Altria Group's super duper risky. I mean, it's hard to say a Dividend King is super risky, but anyway, they might opt for lower yielding stocks instead of higher yielding stocks just because they don't want to take on the potentially additional risk. That's a big factor for a lot of people. People like to, especially dividend investors, they like to buy and hold these stocks forever without having to worry too much about them. We call them, a lot of these stocks, like the Pepsis, the Coca-Colas, Procter & Gamble's, I keep going back to those. We call those stocks sleep well at night stocks because typically once you buy them, it's like you don't have to worry about them. And some people like to invest that way, where they can just, let things grow in the background on autopilot while they could, go on and live their lives without having to worry too much about it. And you just don't quite get that as much with a lot of higher yielding stocks. Like I'd be considerably more stressed out owning something like AGNC or PSEC or, some of these really higher yielding stocks, or like Zim, some of these really higher yielding stocks in my portfolio. For me personally, I wouldn't want to do it. Now, that's not to say you shouldn't buy high yielding stocks. I know I personally have a handful of them. I've got ORCC, Main Street Capital Corporation. I have some JEPI. EPD is a higher yielding stock, but I think that's a different case. But, I don't keep super high allocations of these stocks in my portfolio. They're not super heavily weighted positions in my portfolio. So, my bigger positions are other ones like Starbucks or Procter & Gamble, Johnson & Johnson, Snap-on, these lower yielding companies that I feel a bit more secure about. Luis, man, you're killing me. Sold Johnson & Johnson too. So sorry, dude. Don't worry about it. You don't have to explain it to me. Do whatever you think is best. Amadou says, with 22 tickers, I didn't have any issues. Thanks, Ryan. Well, good, man. I'm glad to hear that. Really, with the spreadsheet, guys, like, it was just one thing that I initially I made it for myself. And at some point I was just like, you know what? Why not just give it away? Why not? It's been helpful for me. Let me just release it to everyone else because maybe they might find some use out of it as well. And that's why, it's like I kind of just put out new versions when I put out new versions. When I don't know. I don't really know how to explain it beyond that. It was just something that started out like, this has been cool for me, so hopefully you guys like it too. And I don't know. When I see comments like that one, it's like, oh, just pay $5 and it's a lot easier. It's like, yeah, I mean, probably true, but just it's a lot cleaner too. It's like, well, man, I guess like I said earlier, you're getting what you pay for. I don't know. No respect. I get no respect. Who is it? Who am I? It's not a good impression, but who is it? You guys know this. Let's see here. Okay, this is actually a really good question. Actually, I'm going to come back to this, Paolo. There's one quick one that I want to answer real quick from EA. Would you ever be interested, in Microsoft? I thought you meant for the spreadsheet like Microsoft Excel. Yeah, I would be interested in Microsoft, but I already have Apple in my portfolio, and for me, for now, that's good enough. Maybe someday Microsoft, but I'm not in any rush to buy it. Paolo, isn't like the higher yield less the growth? So basically, Paolo's asking, don't you get less growth with higher yielding stocks? Typically, yes. Typically with higher yielding dividend stocks, you won't benefit as much from share price appreciation. But okay, let me explain this because that's not necessarily a bad thing. I personally don't think, and let me know what you guys think in the live chat. Let me know what you think about this in the comments below if you're watching the replay. I don't personally think that's necessarily a bad thing. You hear this all the time where people hate on dividend stocks because they don't have as much growth, specifically higher yielding dividend stocks because they don't do as much in terms of share price appreciation. But I want to explain to you guys the concept of total return. And I'll show you an example of this. There's actually a whole column for this on the spreadsheet. Total return is what you get when you combine your share price appreciation with your dividends received. You combine those two things, and you've got your total return. And I think more than anything, that's the most important metric to look at and to use when measuring your investment performance. When you're analyzing the performance or reflecting on the performance of a particular holding, I think you need to look at it using the total return lens, not just share price appreciation, not just dividend income, a combination of the two, because really what they are, it's two sides of the same coin. And let me show you what this looks like on the spreadsheet. So going over to mine, guys, real quick. So let's use Apple as an example, right? So I just said Apple, I've owned it for a month and a half now. My Apple position's already up 16.6%. Now this column right here, this is the market return. This shows you just your share price return. So we can see Apple's up 16.5%, my AbbVie's up 33%, Chevron's up 83%. Okay, these are all just share price returns, but total return, it's a different story. Total return is going to take your dividends into account. So with AbbVie, yeah, I've gained 33% in share price, but my total returns, 40%. So I gained an extra 7% just from dividends. And this is important because it allows you to, I think, better compare the return across different types of holdings. So it makes it easier to compare the return, not easier, but you can then compare the return you get from Apple with like the return you might get from a higher yielding stock like ORCC, for example, going back over here. So my ORCC position, okay, it's not really done much in terms of share price returns, but total return, man, I'm up 9.5% on this position. That's just from dividends, right? And if you think about it, like, how do I say this sentence? The unrealized gain is just, you need to look at it in terms of dollars. If you have a $100 total return, it almost doesn't matter. I don't want to say it doesn't matter because it's preferential, but that total return, that $100 can come either from share price appreciation, unrealized gain, or it can come from dividends received, dividend income, and it's still, $100 return on your investment. The difference is with share price returns, they just haven't been realized yet. That's why they call it an unrealized gain. So I hope that makes sense. And I try and explain this to how do I say this? I want to explain this to you guys, and I want this to make sense because this is an important point. Because a lot of people, I think, shy away from higher yielding stocks because they don't have the share price returns. But, it's still okay, I think, because in those cases, you're getting a total return from the income side of things. That's where your total return is coming from, more from income. And some stocks do that, right? Like some stocks just do more in terms of share price returns. Some stocks just do more in terms of income. They serve different purposes. And this is where it comes down to preference. Like, where do you want the majority of your total returns to come from? Would you rather it come from share price appreciation, or would you rather it come from dividends received, from that dividend income, from the cash flow? And this is going to be different from investor to investor. Me personally, I like to have a good balance between the two. I've got some stocks in my portfolio, like you saw, like the Apples, like the AbbVie's, that have, like the Chevrons, that have really done well in terms of share price. There's some dividends there too, but they've really done more, in terms of share price appreciation. Now, but then I have others that are like ORCC, Main Street Capital Corporation, AT&T and Verizon, that haven't done as much, share price growth, offered returns there, but they're crushing it for me. Like, I'm getting a more of a total return from cash flow. So that's kind of how I look at it. And I do think that's an important thing, but I don't know. That's my rant on that. Let's see here. Luis, man, you're not breaking my heart. I'm messing with you, man. You're good. Yes, Cliff, Rodney Dangerfield, thank you. Like I said, it was a bad impression, but we got it. Oh, Carl got it too. Rodney, Chris got it. Rodney. Nice. Charles got it too. Rodney. Yep, Lucas got it too. Let's see. Oh, Ivan, man, this is a good question. So buy one, sell one. You know what, Ivan, dude, this is a really good idea. I could make a whole video series just around this, you know? Buy one, sell one, hold one forever. Intel, Procter and Gamble, Altria Group. Okay. Okay, dude, this is easy. Okay. This is so easy. Buy Altria Group, sell Intel, hold forever, Procter and Gamble. Way too easy, man. I love that. I'm gonna save that actually. That would be a really cool. That'd be a really cool video idea. So take 3 stocks, you know, go through each of the 3, and then at the end you got to say which one you'd buy, which one you'd hold, which one you'd sell. Ivan, dude, you're a genius. That just gave me a great idea. Thank you so much. Love that. Dude, that's so funny. Jim. That's awesome. Let's see here. Yeah, so like this is what it was a spinoff of, right? That's what the buy one hold one, buy one sell one hold one's a spinoff from. I love it, Ivan, dude. That made my night, man. That was a really good idea. I think that's going to be a lot of fun to do. Okay, Mohammed, this is a really good question. So, if you were investing your first 10K gradually, would you go for a higher yielding dividend, say 7%, instead of a safe bet like McDonald's? No, I wasn't. I would not. So if I was investing my first $10,000, this is what I would do. So I would pick at least one ETF. I would make an ETF like the base of my portfolio, okay? Maybe even put 100% of your ETF or 100% of that 10K in an ETF. But if you're feeling froggy and you want a few individual positions, you want to mess around with those, I would choose one ETF, make it like 50 to 60%, maybe even possibly make it 70% of your total portfolio allocation, okay, $7,000 in an ETF, and you can maybe even DCA into that, dollar cost average into that slowly, and, you know, invest all that $7,000, maybe not at once. Do that, and then, you know, the remaining 30%, if you want individual stocks, divvy that up across 3 different individual companies and make those companies ones that you understand, okay, ones that you have a good grasp on, ones that you maybe even use your customer of. And I know there's going to be some of you guys out there in the live chat, in the comments, that are like, yeah, you shouldn't, don't buy what you know, you're not, it's about valuation, blah, blah, blah. But I think when you're first starting out, like, just valuation, learning how to value stocks, it's not going to be something you're familiar with yet. So don't worry about it. I just think by picking a few individual stocks in addition to that ETF, it makes it fun. You know, like me personally, I'm a big Starbucks customer. We drink Coke Zeros a ton around my house. And, you know, I use Dawn dish soap, Tide laundry detergent. Probably should use some more Old Spice. And so, you know, those would be 3 natural ones for me, okay? Maybe I buy some Starbucks, I buy some Coca-Cola, I buy some Procter & Gamble, or, you know, we do our grocery shopping, a lot of it at Walmart, some of it at Target. So maybe, you know, Walmart, Target, those would be good ones to consider for the portfolio as well. But I would choose 3 of those, you know, ones that I'm very familiar with, just when starting out, you know, 10% into each one of those, 70% in an ETF like SCHD or VTI or VU, and, you know, go from there. I love that question. And you know, the cool thing about that question too is there's so many different ways to slice it. Everyone's going to have a different approach, and it's interesting to hear people's thoughts. There's some other people too. Like I've gotten some other comments about this exact question that are like, no, don't do that. Just right off the bat, pick 50, 60 different stocks. And then over time, you know, you'll figure out which ones are the winners, which ones are the losers. You sell out of the losers, you just keep the winners. And over time, you'll end up with like 20 good ones. That's another way to go too. It wouldn't be how I do it, but that is a way to go. Caleb, which one would you rather own, AT&T or Verizon? Well, I have both of them in my portfolio, Caleb, and I'd say right now it seems like AT&T is really been on the up and up. Yeah. I don't know. I don't think either of them are bad buys. I think they're both pretty stable companies. Definitely in demand. Like, you know, you've heard it said before, a lot of these communication stocks, just with how much we're on our phones, you know, and on the internet and stuff like that, it's almost becoming more of a utility play, you know? So I don't know, but if I really had to choose one right now, I'd probably go with AT&T right now, to be honest with you. Like they've been on the up and up ever since the spinoff. They've been headed in a better direction, and I love to see that. I love to see the sentiment starting to change for this company, because for a long time, man, AT&T was like one of the most hated stocks on the market. Like you couldn't make a video on AT&T or read an article on Seeking Alpha about AT&T without like a flood of comments just ripping it to shreds. And I'll tell you what, it's too soon to tell what's going to happen with this company, but I'll tell you what, Intel is in that same exact position right now, rightfully so. Like they deserve some criticism for sure. And like on that note, you guys might remember this. I posted a video on Intel maybe 3 months or so ago now, like right after their last quarterly earnings. And in that video, I basically said, the video was titled like AT&T is a huge risk, but I'm buying more, which was true. I bought more. I had bought more around that time. But in this video, I basically said AT&T is risky for reasons A, B, C. It's reasons we already know. Market share, transition, they're just going through it. It's a risk, but I'm buying more because I think in a matter of years, by 2025, 2026, a few years down the road, once they get through all these developments that they're working on, hopefully things will be better. I think it should be good. I can't imagine a world with all the tailwinds the industry as a whole has. I can't imagine Intel not being around and whatnot. And so I said those things like, if you're going to buy it, just know it's going to take like a few years. Like it's going to be a very bumpy road. It's going to be very turbulent. It's going to be like flying on Spirit Airlines with half a wing chopped off. But, I think they'll emerge the other side a better company. But it's going to take a few years. So I said this in that Intel video. And I like after the recent earnings report, it's like I've just been getting like a flood of not very nice comments. Just people like saying L or like, oh, this video aged like spilled milk, stuff like that. And I look at them and I'm like, what are you talking about? I'm like, everything I said in that video still holds true. It's like, they did not have a great quarter. There's no denying that. And this last year was not very good for them, but what a surprise. It's like we knew that was coming, and everything I said in that video still holds true. It's going to take a number of years, and let's see what happens. It's too soon to tell. I think the Intel story is far from over, and I don't know. As you can tell, comments like that kind of rub me the wrong way. I don't want to say rub me the wrong way, but they get my blood up a little bit. Jason, man, haven't caught a live in a while. How's it been, man? Things have been good. I can't complain. I hope the same for you, my friend. I'm happy to see you in here. Brett, I can relate, Ryan. I made my own spreadsheet in Excel even, and I'm very proud of it. Good, man. I mean, Brett, that's awesome. That's been one of the cool things about making the spreadsheet. It has been a good learning experience for me for sure. I didn't know anything about spreadsheets prior to dipping my toe in this, but you learn little by little, and that's why I was kind of saying earlier in the video, even for those of you who like might be having trouble adding new rows or whatever, it's like hopefully that demonstration was helpful, and it's going to take a little bit of work on your end, but I think you'll be better off for it by learning how to adjust the formulas and tweak the dividend log page and make sure everything's good on the spreadsheet. I think it's going to be a good learning experience. It's going to be a bit of work, but man, I think you'll develop a good skill set doing it, So anyway, EA, how are you enjoying Vegas? The cost of living lower than Sacramento? Yeah, man, I love living in Vegas. September, October, November, December, January. Been here about 4.5 months now, and I cannot say one bad thing about living here. I seriously can't. It's I'm so glad that my girlfriend and I made the move out to Vegas. It's been awesome for both of us. We both absolutely love it. Yeah, and I'm just I'm so happy to be here. I really am. Let's see here. I'm only 4 minutes behind in the chat. That's pretty good. Let's see. You know, there's comments like this one with Jim, you know, bullish on Intel in the future, 3 to 4 years. But then there's other ones like this one by Mr. Slocum, oof, for Intel. The other side, it's going to take World War III Taiwan invasion to save Intel. Let's see what happens. Like it's too soon to tell. You know, way too soon to tell. I get not wanting to start a position in it for sure. Like I totally understand that, but like I feel like people are talking like Intel like it's going out of business tomorrow, and it's like let's see what happens. Jack, man, like you hit the nail right on the head here. They don't understand long term and act and make comments of impulse and short term thinking. I don't know. I just think it's easy to hate. I think it's easy to hate on companies, you know. But like I said, you know, AT&T went through the same exact thing. People were saying the same exact thing about AT&T. It's dead. It's going to go bankrupt. The debt's too high, but it's like, man, they're on the up and up. They are turning that ship. And the thing about these big multi-billion dollar companies, it's like they're big ships, and big ships take some time to turn around. So let's see what happens. What? Oh, someone's coming to join us, guys. Hi, buddy. Hello. There he is. We were asking about you. We were wondering, where's Peanut? Yeah, Leroy, like this is exactly it, man. People love to kick something when it's down. And I understand, like I understand the negative sentiment, but like I said, it's like, it seems just like people think it's going out of business tomorrow. It's like, guys, none of this is a surprise. We knew it was going to be a tough time. Like this is, goodness gracious. Anyway. Michael, do you have any mining stocks like Newmount that's paying a 5% yield just to have metal exposure? I do not have any mining stocks. Yeah. I do not have any mining stocks. I don't have any mining stocks. I don't have any shipping stocks. Kind of staying out of those. Brett here. Excuse me, guys. It's good advice that if a new investor has a bit of fun, they're likely to stick with it, and that's the most important thing. You know, I agree, and that's kind of why I suggest, for better or for worse, like, you know, pick a few individual stocks that you're familiar with, like Target, the Walmarts, the McDonald's, the Starbuckses, the Procter & Gamble's, Coca-Cola's, the Pepsi's. It's like they're all good companies. You know, you could make the argument that the valuation's not like the best on a lot of these, but like I said, when you're first starting out, the valuation, you don't need to be concerned about it. Just get some skin in the game. You can kind of learn as you go, you know. Let's see. Okay, I started a dividend portfolio 2 years ago and chose stocks on pure point system. No personal emotion in the picks. A stock I would never have chosen on my own. Dix is my best performer. Nice. Peanut wants to leave his 2 cents about Intel. Peanut's actually the one who got me into Intel. He'd had at this point when we were talking about it, he'd had one too many Cutwaters. He'd eaten his weight in treats, and I think he'd been chain smoking a few cigarettes. So I probably should not have trusted his judgment, but he's a very convincing fella. Let's see. My dashboard dividend income is not changing. What did I do wrong? Charles, I'm not sure, man. So sometimes, just give it time, I would say. Sometimes something that happens, you'll notice, the stock's annual dividend, the annual dividend income column for some of the stocks like don't load immediately. This happens sporadically. I'm sure, Charles, you just need to give it time, man. Come back to it. Maybe refresh the page. I bet it'll fix itself. If for some reason it's like not working by tomorrow, send me an email, and I will help you get it sorted out. There should not be an issue. Like all the formulas work fine, so it's probably just an issue loading it. But I'm sure it'll work itself out. But yeah, you can always shoot me an email too if you need help. So let's see. Dan, Ryan, my John Deere and what? My John Deere and Broadcom, no, AGCO. What's AGCO? I don't know what AGCO is, but I know John Deere. When are you going to get in on that sweet tractor money? Man, I should consider it. I really should. Are those in the industrial sector technically? If so, like I think there's some really good stocks in the industrial sector. That's a really a fun sector. There's so many different industries that it keeps it interesting. Jim, hopefully he didn't leave his 2 cents on Intel in the litter box. Yeah. Yeah. Yep. Let's see here, guys. Couple more questions, then I gotta hit the road. It's Friday night, which means Chipotle. So after I get off the stream, I'm headed straight to Chipotle, gonna pick up a burrito. But Saul wants to know if I'm gonna play any World Series of Poker tournament events. No, I'm not. What? Do you guys hear him? No, I'm not going to play any poker events. I'm really not a big poker player. I can kind of play, like I know the basic rules and stuff, but I'm really not that good. So I'm just going to invest my money. I'd probably be better off putting it into Intel. What are you doing? I know. Oh my gosh. Okay, so wants to know your opinion on realty income and LTC properties. Are they good to add for dividend portfolio? Hey, stop it. So I personally have realty income in my portfolio. Love it. I think that's a great REIT to own. It's like probably one of the most popular dividend stocks out there. LTC properties, I don't quite remember them off the top of my head. I know I've looked into them before. I think from what I remember, their financials look pretty good, but I can't say off the top of my head. Okay. Oh yeah, Jim. So going to Chipotle wearing a white shirt. No, I'm definitely gonna change my shirt before I go. I'm one of those guys who, like, anytime I wear anything white, it's, even if I'm not eating anything, I'm gonna spill something on my shirt. You know, it'll find a way to happen. My shirts find a way to make themselves dirty, get spilled on. Chris, Ryan, are you gonna watch the Super Bowl? If so, who are you picking? You know, Chris, believe it or not, man, I'm really not a big sports guy. I don't watch football. I don't watch basketball. I don't watch baseball. And I this is gonna be so bad, but I don't even know who's in the Super Bowl this year. I think the Chiefs are in it. I don't know who the other team is though. Like, that's how much I don't pay attention to the sport. And I've had friends too, like, try to get me to join their fantasy league, and I'm just like, nah, I'm just not really interested in it. And they always tell me, well, you know, if you play fantasy, then you'll get interested in it. Like, it'll make you interested in football. But I'm just like, yeah, I just don't know that I want to get interested in it. I just, I don't know. It's just really not something I'm interested in. Growing up, I was much more into things like skateboarding. I skateboarded religiously. Skateboarding, snowboarding, kind of those type of sports. So I know considerably more about those than I do like football or basketball or, you know, the more traditional stuff. So that's kind of where I'm at with that. Okay, last question right here from Jason. What are your thoughts on Costco? I know recently you were talking about Kroger, Albertsons recently. Do you think they will be better than Costco long term? It's hard to say whether they're going to be better than Costco long term. I think Costco's a fantastic company. That's why they're so expensive, I think. And that's just kind of my thing with Costco. It's just, I personally wouldn't feel good about buying it at this this valuation, whereas I think Kroger's a much better valuation. And I really like Kroger. You know, Kroger buys up a lot of regional grocery stores, grocery chains, I should say. Like Southern California, Ralph's is the big grocery chain. They own Ralph's. Up in Oregon, you've got Fred Meyer. Kroger owns Fred Meyer. Here in Las Vegas, they own a chain of grocery stores called Smith's. Love Smith's. Smith's are one of the nicest grocery stores I've ever been into. And so I still feel good about owning Kroger. And that's my take on that. Probably not the best answer, but that's kind of where I'm at with it. So anyway, guys, I think this is a pretty good place to wrap it up, 6:04. And I will say I appreciate you guys so much for tuning in to another Dividend Happy Hour. All 120 of you who are still here, thank you guys so much for all the support. I hope this was helpful for those of you who had questions on using the spreadsheet. If not, if you still have more questions, feel free to shoot me an email. I'm here to help. And with that, guys, I hope you have a fantastic weekend. Stay out of trouble. Have fun watching the Super Bowl. And be sure to tune into Sunday's video because this one's going to be a good one. I actually spent a lot of time working on this video, so I hope you guys enjoy it. Have a good weekend, and I'll see you in the next one.